Well, we're here today at our seminar, and one of the questions that's come across the floor a bit is what of negative gearing. I've quickly put this sheet together to explain it in what I call layman's terms. And for this example, we're using a property with a purchase price of $500,000. Now, in purchasing a property, you have what they call ongoing costs. And the first one is called the interest rate. Banks like to get their piece of their flesh, so for example, we've used an interest rate of 7%, which is around $35,000. And rental expenses, which include insurance, management fee and pest control, of around $4,000 a year. The total of those is $39,000. So we have rental expenses for the property up $39,000. Now let's look at what type of income the property derives. In this example, we've used $24,000. If we take that away from our expenses, we have a cash flow of minus $15,000. Now let's look at how that cash flow impacts on the second part. So we're starting up top here with our negative cash flow again, and now we're looking at what the ATO gives us in the form of taxation benefits, and the major one is in the form of depreciation. These are specifically for new homes, can be for second homes. In this particular case, the number is $12,000. So we take that off the $15,000 on a negative cash flow, and we find that the holding cost for the property over a yearly period is around $3,000 a year or $70 a week. Now, one of our people at the seminar here is called John, and I've done a specific case for John. John's income is around about $70,000 a year. With the rental income, we have his total taxable income now of $94,000 a year. But John has deductions, as we discussed earlier, deductions of rental expenses, depreciation, which equals $51,000 a year. So we've taken John's income of $94,000 and taken the deductions off. He now has a new income of $43,000. And on a yearly basis, let's look how that impacts his taxation. His previous tax liability to the tax department was $13,900. But using this strategy into property, he has a new taxable income of $5,200. In fact, we've increased his tax savings around about $170 a week, which offsets this expense here of $70 a week for the holding costs of the property. Now, if we look at overall who pays for the property, we have the tenant here roughly pays about 60%. The ATO roughly pays about 30% in the form of deductions, and you, the investor, pays around about 10%, which relates to this figure up here. Let's look at John's situation. He's been able to purchase an investment property with only $70 a week of out-of-pocket expenses. If you feel the situation would suit you, contact us at dwyerpropertyinvestments.com.au. Thanks guys, have a good day.